Welcome to Common Sense, where we aim to educate, empower Black entrepreneurs that are dedicated to the growth of their businesses and finances. I'm your host, Ayo Idowu, and today I'm very excited because we are working in a realm that I'm very familiar with and very passionate about. Today's topic, we're going to be talking about turning portfolios into proceeds and mostly low maintenance investing. I'm very excited about the guest I have today, Winston Trotters, who's a financial advisor, personal finance speaker and enthusiast, and a husband and father of two. Winston, welcome to the show.
Thank you for having me. Thank you for having me. Glad to be here.
Yeah, Winston, again, this is a near and dear topic to me. Obviously, you being a financial advisor, and who would have thunk I'm a financial advisor as well too. And just investments have always been something that I think are very interesting, right? Mm-hmm. Especially growing up, coming from a family where, my parents worked their butts off, but didn't always understand kind of time value of money, putting your assets into something that are growing. And, as Black folks, we attribute to how much money we have to how many hours we work. So Getting into the business for me was very big on the sense of I wanted to turn into Robin Hood and take all this knowledge I learned in college and from my books and studying for my series exams and all that and just give it to the folks who don't normally get it. So I'm excited that you're going to come bless us with some of your expertise today.
All right. Good to be here. I'm excited as well. So
before we get started, let me ask you a question. Obviously, I know what you do. I don't think they know what you do. What is your job? What do you do? What's the finance? Tell me about what you do on a regular basis.
Good question. So I consider myself to be a financial coach, right? I come from a sports background. I love sports.
What sport?
Basketball.
Boy, you ain't hoop.
Yeah, I could hoop.
What position?
I was a point guard.
Okay, come on now.
Yeah. I love basketball. And so I try to keep things as simple as possible and talk about things in a way that clients and people can understand, especially from a financial perspective. One of the things about the financial world is some people feel it's intimidating to approach because they don't know what they don't know.
Yeah.
And so the reason why I consider myself a coach is, and I go back to basketball, is because most people can make the translation and understand, right? You think about a basketball team, you got the players that's out there playing the game. The LeBron James, the Kobe's, the Jordans, they're out there playing, but they have a coach on the sideline that's giving them the game plan.
Mm.
They're still executing in the game, but the coach is giving them the game plan.
Best athletes in the world.
Yeah, best athletes in the world. They still have to have a coach.
Mm.
Similar for me in the financial world. Whether you know a lot about investments, money, things of that nature, or you don't know much at all, right? My role is to give you the tools, the insight, the knowledge, the resources to kind of help you make sound, informed decisions around your money and your investments.
I love that you said that too, because I think that analogy is great because obviously we have financial professionals in our books of business. And it's funny because, you think that if you know it, why would you need to hire someone for it? And you're saying part of it is the coaching aspect, right? Like MJ's the best basketball player to ever touch the planet. LeBron might be one of the smartest basketball players we've ever seen, but at the end of the day, well, LeBron don't always listen to his coach, but at the end of the day, these players are still listening to their coaches because, again, separate set of eyes, not emotionally tied into what's going on, and then creating a plan for someone who, you can know about investments, but you look at investing in wealth management and strategies every single day. You're up to date on the strategies and any legislation change.
Oh, yeah. And then again, too, even for the ones that may be knowledgeable about investing, it's good to bounce ideas off other people.
Yeah.
Like you use LeBron James. Sometimes LeBron doesn't listen to the coach. Sometimes the coach or LeBron is giving thoughts and ideas to the coach and say, hey, maybe we can try this. Maybe we can look at that. It's a give and take. It's not all just one-sided.
Is that what your client meetings are like? They're very collaborative? Like sometimes they bring an idea to the table and
some of them are.
You guys discuss?
Some of them are. Yeah. Because again, I don't think I'm the smartest person in the room. Right,
you probably smartest in this room.
I might be, but if I'm that person all the time in that room, I don't want to be in that room anymore. But ideally, in my client meetings, again, I just try to be a value resource, right? And if I'm able to enlighten, educate, and be that resource to my client, great. And if my client knows a few things, and then we can collaborate, we can discuss, we can banter, we can go back and forth, we can again bounce ideas off of each other. Because at the end of the day, I'm just trying to do what's best for them and work on their behalf.
No, I feel like people always see our business as a financial advisor and think we're like just watching the markets trading all day, more of a stockbroker type role. What are your thoughts about that conception of what your job is? Even though you're talking about portfolios today,
right?
But what's your conception about that notion?
I think that's a false narrative, right? Because in my opinion, if that was the case, especially in today's day and age, there's technology, there's computers, there's AI that can do similar things like that.
Mm.
Like I'm a real person, right? So in my world, I'm thinking about what I feel like might be the best or in the best interest of my clients, right? So I have to get to know or have a relationship with that client to kind of have an idea and say, hey, this client A or client B, these two different investments are going to be ideal for each one of them. Or this one investment may be ideal for both of them, right?
Yeah.
Because I know that client. And I'm getting to know that client, right?
Yeah.
We have that relationship. And so I think when you talk about like brokers and things of that nature, they're just in the room behind closed doors, just, looking at the numbers, the X's and O's and all that kind of jazz, just executing. And I could be wrong, but I mean, from my perspective, it's more of a relationship deal.
And there are people that do that, but that's just not you, correct?
That's
You're
not
more, I've heard you throw around the term holistic financial advisor, right?
Yeah.
And I think there's a few other episodes on this season where we've had financial advisors as well, but what does the term holistic financial advisor mean to you?
Good question. So from a holistic standpoint, I think about full service, right? So, and before I get into that, you mind if I kind of give you a little bit about my background? And talk there, or we'll circle back to that.
No, this is your show, man.
No.
They ain't come to see me.
I'll answer the holistic thing, right? And I think about it, and the reason why I was going to talk about my background, and I'll come back to that.
Well, no, hold up, time out. Tell you. Oh, okay, remember, do your thing.
I'll come back to it. But from a holistic standpoint, because I like to spend time getting to know my client and figuring out what they need and what's in their best interest.
Right.
I can service them on a full scale, right? So, for example, if my client needs risk management, I can help them there. If my client needs to investment solutions or retirement solutions, I can help there.
Right.
If they, need, property and casualty insurance or home and auto insurance for their car and their home, I have some resources or availability there, things of that nature. That's what I mean about full service or comprehensive.
Okay, interesting. So let's since you want to go there, let's talk about your history. Let's talk about your past. How did you get to where you are right now? Tell us a little bit about your story.
Yeah, good question again. So I it's different from you. You say you went to school for this. You wanted to kind of spread your wealth and knowledge with the community.
And I died for this too. My bad. I've always wanted to say that.
I didn't start out in that realm.
Okay.
I started out in IT. I was an engineer. When I graduated, I got a computer science degree out of school. I started working for a major retail company and as a software engineer in a cubicle behind a computer screen, just banging out code, fixing code, tweaking code. And I was dying a slow death. I absolutely hated it.
It just wasn't for you?
Not at all.
That's funny.
Not at all.
That's how I feel when I started in accounting before I got into finance. And that's kind of how I feel about accounting.
Yep.
No disrespect to any accountants out there, but it was just one of them things. I'm like, look, I'm good at math. I'm good at numbers. I'm good at organizing them. Man, I can't do this every day.
Yeah.
And on top of that, the accountants in my class, like, dog, it was crazy. We just didn't have the same personality.
Yeah.
I'm a class clown, so I'm in the back telling jokes and nobody was laughing at nothing. I was giving gold too. I'm like, man, I can't be here no more.
Yeah, my wife's an accountant. She's a CPA.
No disrespect to her.
No, not at all.
Mrs. Trotters, we apologize.
We need the CPAs and the accountants and all that. We need y'all.
Yeah.
We do need y'all.
She's an exception to the rule. She has tons of personality.
Exactly. And so me being in a cubicle behind a computer screen all day was just, again, I was dying a slow death. And so when I left there, I really didn't know what I wanted to do with my life. And I met another financial advisor. He encouraged me to kind of meet with another firm. And at first I was like, I don't want to be no financial advisor. I don't want to do this. But the more I got familiar with the business, I've always loved numbers. I've always loved math.
Right.
And I was always a people person. And I was always one of those people that tried to help people in any kind of way that I could. And the more I got to learn about this industry and the business, I was like, this fits me, right? Especially in our community, like with all the technology and the wealth of knowledge that's out there on the internet, and not just in our community, it's as a whole, we as a people, we still don't know hardly anything or as much as we should know about wealth, money, and finances and investing. And so I was like, man, this is a niche that is needed. This is a service that is tremendously needed and one that I feel like I can provide and help people with.
And obviously there's people that need it too, right?
Oh yeah.
Yeah. So
yeah. And so that's how I moved into the financial world. and I've been building and growing from there and trying to help as many people along the way as possible.
So tell us about, so we talked about holistic financial advisor, and then we talked about kind of how you want to tell a story with your past and how you got into it.
Yeah.
Let's talk about that a little bit more
And so,
before we get into the portfolios. Because I think this is very important, especially for Black entrepreneurs. I think it's very important when working with an individual. And you hear us say this on a lot of other episodes. When working with an individual, we truly feel like you need to understand who you're working with and ask the right questions. So I'll let you take it from there.
And so when I first got into the industry, I was working for a company that is largely based on insurance. That's their bread and butter, their foundation. So I thought I was working as a full service comprehensive financial advisor, but with every recommendation that I was sending out to my clients and that I was getting from my mentors and people that were helping me kind of understand the business, it was always slated towards risk management or insurance. And I started to feel like I was just an insurance salesman. And there's nothing wrong with that, but I wanted to be more. I wanted to do more. And so I worked with that company for a couple of years and then finally got introduced to another advisor at a different company that did more holistic, full service, comprehensive financial advising for his clients. And he said, Winston, if you're going to be in this industry, right, maybe it's smart for you to come work with me and let me teach you how to be a full service comprehensive advisor, right? And I did that. It took me a little while, but I ended up doing it, and it's the best thing I could have done.
Accreditations and taking the right exams.
Getting the right
because as an insurance person, you didn't have all the accreditations and the tests, the correct tests and certifications that you have now. Correct?
All of that. Okay. As an insurance person, I just had I passed a test to write life insurance.
So what does one ask when looking for an advisor to make sure? Because we've talked about this in another episode. The term financial advisor is very broad term, and not everybody does the same thing. So if I'm looking for something more along the lines of holistic, or if I'm looking for something for insurance, or just someone who sells mutual funds, right? Right. What questions do you think you should ask?
Well, for me, I've had people ask me, Winston, are you a fiduciary? And the number one, of course I am, right? I've had other people ask me, what credentials do I have? And I tell them, I passed the Series 7, the 66. I still have my insurance. I'm an APMA, which is accredited portfolio management advisor.
The 7 allows you to trade securities. 66 allows you to give advice off those securities and charge for a fee. What are you talking about? Your APMA, accredited portfolio manager. So,
yep.
I mean, we talking to a accredited portfolio manager right now about portfolios. Okay.
Yep. And then, of course,
life and health
as well. Life and health as well. And so, for me, and of course, there are other accreditations that you can go out there and attain and gather. I'm considering some of those as well. But for me, those are the basics that you have to have when you're considering hiring an advisor and asking questions to say, hey, do you have some of these accreditations or titles behind your name? Yep.
Well, I appreciate you sharing that, man. Let's dive into it a little bit. We already talked about comprehensive financial advisor, what it means, but let's talk about your clientele. What type of clientele do you work with?
Good question. A large portion of our book, is executives, entrepreneurs, professional athletes. But we're not just geared towards that. We work with a host of other people, just, regular, common working people. I tell people, because a lot of times we get a lot of referrals from our client base because of the work that we're doing.
Because you do a good job.
Yeah. Ideally, I like to think
you don't get referrals unless you're doing a good job.
I like to think that's the case. And one of the things I tell my clients as they're introducing me to other people is I tell them, hey, don't try to quote unquote qualify, right? The thing that, when you're trying to figure out, do your friends or family or whoever you want to introduce me to, would they be eligible or qualified to work with me? I say, hey, just think about it from this standpoint. Do you think that at the end of the month, they have residual or extra income? That they're trying to figure out what to do with at the end of the month, then we can work together. On the flip side, if you say, hey, you know what, they're spending more money than they have coming in, then, not that we can't work together, it's going to just take a little bit more work for us to kind of get off the ground as far as our path is working together.
I always think about, and especially when working with people of color, because my business is primarily people of color, actually not Black folks. Black folks is primarily my business, right? And let's say if the barrier entry is here, and a lot of people
I work with everybody, not just Black people.
I mean, I work with everybody too. White people, come on. Mexicans, Asians, what's up? Holla at me.
And then I won't tell y'all what my wife said, like literally a month or so ago, but we'll talk about that maybe a little bit later.
Anyway. Tell me what she said.
No,
we want to know.
Listen, and I hate to say this, but I will. I'll put it out there. Maybe my wife will see this, and I'll get some points for this. But
or we'll cut it out.
A large portion of my client base is female.
Ooh, yeah, I can see how that's an issue.
And so, I've been married 20 years, and my wife was like, "You need to go out there and find the white males to be your clients."
She said,
you can't find white males to be your clients."
Look like she need to partner up with you and be in business.
Exactly. I'm like, look, I'm looking for them. Anyway, so let me get back to this. So.
There's a barrier of entry kind of to where it makes sense to hire an advisor and for us to work with people. And one thing I'm never opposed to is kind of helping people get to that point, maybe on a pro bono basis, or give them a few little tips and pointers. Mm-hmm. But then once you've kind of hit that and follow those rules, that's when we can start working together. And I think it's one of those things where I have a lot of unofficial clients, like, again, some draft picks with no cash yet. And still trying to figure out their way because they could get cut tomorrow and have no money to invest, or NFL contracts aren't guaranteed, you know what I mean? So like you got to be playing 2-3 years before you even have something ready to invest. But I still, they'll call me, ask for some advice, X, Y, Z, or some people just getting into the working world. All I can afford to is put money in a 401k. So,
right.
Just kind of give them tips. But
and I think because we love what we do, mm-hmm. we're going to give free advice.
Yeah. It happens.
It happens.
Unfortunately, they tell us not to.
Yeah,
but it happens.
But at the end of the day, too, like I also tell my clients, like, look, I have to remain in business for me to continue to be able to do business with you.
Right.
So I can't give all of my business away for free.
Right. No.
All of my advice away for free.
Yeah.
But, I like you, I have friends that call me and say, hey, man, what do I need to do here? What should I do here? Or how much money should I save? And all this kind of good jazz. And I talk to them because,
I got you.
I love what I do.
I'm going to take care of you.
Yeah.
But the minute I got to whip out a spreadsheet or fill out, do some stuff with some planning software, like I'm going to charge you.
Yeah.
I'm going to send you that invoice.
Yeah, we got to talk about the numbers.
What's investing? What is it? Define it for us before we even get into it.
Investing. I think about it from this way, right? You take something of value, and in most cases is finances or money, right? You expand it and with the expectation that you're going to get some type of appreciation and or growth or return in advance or down the road or in the future. To me, that's all investing is.
Boom. I put money into something, and when I take it out, hopefully it's more.
Exactly.
Or it's less. Right?
In some cases, it can be, yes.
Mm-hmm. But not when they mess with Winston, it's always more, right?
I can't promise that.
You can't say that. Look, I try to catch him. Yeah. I try to get you in trouble.
Trying to get me. Nope, I cannot promise that.
Do you think there's a space for long and short-term investing?
I do.
And then can you title the differences between the two?
Good question too.
Yeah.
So I always think about it from the standpoint of, let's kind of go back to, and I'm gonna give you a long answer to your short question.
Come on.
Is we just moved into this new year 2024.
Sure did.
A lot of people come out with their resolutions and what they want to do for the new year and how they want to be this changed or transition person. What I'm really trying to say is some people come out with these goals that they have for themselves, right? In the financial world, ideally, you want to have goals. And your goals, you don't have to just have one goal, especially for your money, right? It doesn't have to be a long-term financial goal for my money. You can have short-term goals for your money and or a combination of both. And so, for example, we were talking earlier, you said, hey, you used to sell cars or used to be a car salesman, right? If you say, hey, man, I need a car, kind of.
Yeah, kind of. We'll talk about that later.
Yeah. I need a car in the next 2 to 3 years. Your investing or consideration for trying to come up with the funds and the money for that is going to be different from an investment standpoint than it would be for saying, hey, I'm going to invest or I'm saving my investments or I'm investing for my retirement.
Okay.
And or my financial independence.
Okay. So when you put a portfolio together, it sounds like you don't just have one kind of portfolio. It's like, I put everybody in this because it makes money. You have portfolios that are broken up by when do people need money, how much money they need, how much money they need to make, how much risk they want to take. It's basically every goal has its own mix.
There you go. There you go. Again, again, that's a part of getting to know my clients, what they're looking to accomplish. What are your goals, right? And in most cases, in just about any case, we all need the ability to have access to liquid money or liquid cash.
And you're managing that as well too, right?
I'm managing
because I'm
that as
guessing
well.
some investments you can't take, right? Like you got some investments like, look, we go into this, you locked up for 10 years. And vice versa, we got investments as well that's just like, hey, we're going to put it in. But if something happens next week, this is where we're going to get it from.
There you go. There you go. I met with, I didn't meet with a client today, but I had a phone conversation with a client today, and we're working for some long-term financial planning goals.
Yeah.
But in the meantime, I'm like, hey, we got some short-range goals too. And a part of that is making sure that they always have some level of access to liquid cash or cash. Yep. Now, I'm not saying we're going to hold it in cash, but you know,
some cash equivalent.
Some cash equivalent. Yep.
In 2020, obviously when the pandemic happened, we saw something happen, especially in our people, Black folks. We saw the number of Black Americans investing into the stock market reach record highs, which is great. I think that was amazing. But we also saw a lot of gimmicky stocks and gimmicky moves being made in the market. And even though we were getting in the market really for the first time, a lot of folks, we may have not been doing it correctly. A lot of advisors use the term trading versus investing, right?
Yeah.
Can you explain to us the differences to you between trading and investing?
Yeah. So to me, trading is going to be more short-term, risky timing of the market behavior.
And you don't believe in timing of the market?
Well, I do not. I'm not a believer in timing the market.
Yeah.
No.
It's unpredictable.
I believe from on the flip side of that, from an investment standpoint, I lean more on the side of, hey, let's do some research on a specific company or stock or a position. Let's ideally have a little bit of track record and knowing that, hey, based on previous activity or previous numbers, this position has done well from an investment perspective in portfolios. Let's invest there, and then over time, we can reap the benefits of that investment over time.
Okay, so you use, with your portfolios, you will use kind of fundamentals, they like to call them, or research, or some key metrics that show why it's a good investment versus you think people that are trading are not?
I'm sure people that are trading are doing some type of, or I'm hoping they're doing some level of research or analysis of data and things of that nature to make ideally informed decision on the trading that they're doing. I'm just saying from a risk standpoint, in my personal opinion, it's more risky to do trading and short-term trading than investing for a longer period or a longer time frame.
Yeah, because the market is more predictable over a longer period, which the market is never predictable, but it's more predictable over a longer period of time than it is in a shorter window, like a month, 2 months, 3 months. There's so many factors in a shorter window that can affect it, like interest rates, business, war, XYZ.
Exactly.
A lot of external factors.
Exactly. And I'll give you an example. And again,
I was just about to ask that. Give me an example.
This is no I'm just talking about relevant information that's just happening in the news. And this is no pro or con to a specific company or not, but this is just the risk that you run in maybe doing some short-term trading versus investing. Boeing, right? So recently in the news, they've had some issues with some of their planes. And the door came off.
Yeah, a whole door came off.
Mid-flight.
Imagine, because, I like leg room. Imagine going ahead and getting the exit row.
Yeah, you sit in the exit row. I like to target the exit rows too. And then you sit in the exit row. And I
ain't never sit in the exit row again.
Yeah. And so there's some things that you just can't diversify against.
Right.
Right. And so, that's one of the crazy things that may happen that nobody could have foreseen that happening with that company. So now, not to say that Boeing's not a good company, but if you
that day it wasn't.
Yeah. And from a trading perspective, I think it's just tough. If you said, hey, I'm gonna, buy Boeing or buy a call or an call option on Boeing and, hoping to reap a return or gain, and that's not happening right now. So
you don't think it's a good time to buy Boeing? You don't think they'll rebound?
I think Bowen's a little rocky right now.
Look at me, market timing. Yeah, that's the number one thing we're not supposed to do.
Exactly.
Okay, so you talked about use the term diversification when putting a portfolio together. How important is diversification to you? I know a lot of folks when they get into investing, they think stocks, and they might buy like 2 companies. Like when I speak to high school kids, I tell them like, look, you wear Nikes, start there. You got an iPhone, Apple Watch, Mac computer, buy Apple, right? Mm-hmm. But at some point, once your portfolio gets big enough, we're not just buying one stock and letting it ride. We have to have but we have to have a portfolio with a purpose. And that's not going to be made by 3 or 2 stock positions.
Right.
So tell us a little bit about diversification and how that affects, not how it affects, but how do you guys use diversification and how do you define it?
Well, good question there too.
And how important is it?
It's very important in my opinion.
Mm-hmm.
But for somebody that's really just getting started in investing, right? I kind of have a similar mindset to you,
Mm-hmm.
right? If you wear a bunch of Nike, maybe buy Nike stock. If you own Apple phones, iPads, iPods, all that kind of good stuff,
mm-hmm.
maybe own Apple stock. But once you've started to do that a little bit,
Mm-hmm.
and then I can take a look at your portfolio and say, hey man, your portfolio is heavily weighted in technology. Right. So I say, hey, this is some of the ways that we could mitigate the risk, right? By diversifying. So instead of being in technology, let's look at some healthcare sectors. Let's look maybe in some energy or oil and gas.
Mm-hmm.
Let's look in possibly maybe some real estate or something of that magnitude, right?
Yeah.
Just different areas that we can start to say, hey, in 2022, the technology sector was the hardest hit in the market,
mm-hmm.
down roughly 30 to 40%.
Almost 50 at one point.
Exactly, right?
Crazy.
So if your portfolio is heavily weighted in technology and nothing else, then you took a major hit. Now, in 2023, technology
came back. Still not as much, but
right?
It rebounded.
But from a diversification standpoint, you just want to make sure when you're looking at it, and if you're heavily weighted in one sector or area, right, it can balance out some of the risk.
Yeah, it's the definition of keeping all your eggs in one basket.
Exactly.
Because you drop that basket, you're screwed. Again, 2022 was a great year for tech. 2021 was a great year for tech. 2022 was a horrible year for tech. 2023 was a great year for tech again.
Exactly.
And it's like that's a roller coaster, right? And at the end of the day, you're back to where you started because of where it was. And in the last 3 years, you've seen like a 30% upswing, 40% downswing, 30%, 40%. Before you know, you're back to where you were. You might as well held cash for 3 years, right? Yeah. But a diversified portfolio has actually been up over that time period. Mm-hmm. And the thought process is, and you talked about it, risk mitigation, which I'm going to ask you about now. Diversification is a way to add or to mitigate risk in your portfolio while still being exposed to many different things.
Right.
There was, I have a presentation I give out. And we talk about living on a golf course. I don't know what it was, but like growing up in Minnesota, we got a lot of golf courses. Mm-hmm. And you had money if you lived on a golf course. And I always told people, it's like, one day I want to live on a golf course with a big bow window, right? And, somebody hits a golf ball and they break your window and it shatters. The window's about the size of this wall and it shatters. And I always tell the class, what could I have done better to protect myself from this? And I always be like, man, don't live on a golf course. Or like, put a screen on it. What I could have done was I could have made window panes, right? So we turn this big wall into like 10 window panes. Because now you hit a golf ball, it goes inside and just breaks one window pane versus breaking the whole window.
Yeah.
And that's the same as a portfolio, right? At the end of the day, it's like I save time and money by diversifying the windows, and now I only got to fix something smaller and cheaper. Versus what you bought when you bought Peloton, because it looked like it was going crazy.
And it was at one point in time.
And it was going crazy, right? Well, we can't go to the gym no more. Let's buy Pelotons. They're going to take over the world. Peloton was up like 7, 8, 900%. Peloton lost 97% the following year. 97. That means if you had $1,000, you'd have, help me out, $30? $30 left.
I need my calculator. I use calculators.
If you put $1,000 in Peloton, you have $30 left. And again, you could have saved yourself because in a diversified portfolio with 100 positions, the most you could have lost was 0.25%, right?
There you go.
Now, obviously, your portfolio didn't go up 600% because Peloton was only a small portion of your portfolio. But again, the market's going up as a whole is a thought, or at least your sectors are and how you diversify it. So, so managing risk, how do you guys manage risk besides diversification? Or how do you manage risk in your portfolio? Go going crazy. Besides diversification.
Yeah. Another thing that I consider is ideally, again, and it's part of kind of getting to know my clients and people and what their goals are, is trying to gauge, okay, ideally, how much time in the market do you anticipate to have, right? So a portfolio for somebody in their young to mid 30s is going to look different from somebody that's in their mid 50s or early 60s, right? And what I mean by that is a 35-year-old ideally is going to be in the working world or able to invest in the markets for at least another 20 years, 20 to 25 years before they're retirement eligible to start accessing their retirement accounts. Somebody that's 55, they have another maybe 5 to 10 years to be in the market.
If that,
right? So from a risk perspective, their risk tolerances or the risk scale is going to look different for them. And so I can't have a 60-year-old or a 55-year-old with a portfolio that looks similar to a 30 or 35-year-old. I mean, I'd lose my job.
Literally, lad, they're gonna come.
Yeah,
for
my
you.
compliance team would come. They would come at me. So,
what are you adding to these portfolios to make them less aggressive?
Good. So traditionally in the investment world, you have stocks and bonds, right? And so if people have heard of like the 60-40 portfolio or the 65-35 portfolio,
the famous 60-40 portfolio.
Exactly. 60 is
going to be... You can't open up a JP Morgan guide to the markets without seeing the 60-40 portfolio.
Yeah. That 60% is going to be comprised of equity or stock. That's going to be the stock or equity side of the portfolio. The 40 side is going to be bond or fixed income. And traditionally, they've had an inverse relationship.
Right. Inverse meaning what?
Meaning that when stocks will be up, bonds will be down, or fixed income will be down. Or when bond or fixed incomes will be high, stocks or equities will be down. Right?
So it's kind of like
a seesaw.
A seesaw or a checks and balances of the portfolio.
Exactly.
That way not everything's down and not everything's up.
Exactly.
Okay.
Exactly. And the reason why I keep saying traditionally is because 2022 was not the case.
And 2023, they've been kicking it.
Yeah.
That's the Markowitz theory.
I know
it's
man.
About to go.
In 2022, both stocks and bonds were down.
Yeah.
Unfortunately. So
crazy for the first time ever in American history, right?
For quite a long time.
Okay.
Yep, for quite a long time. So yeah, that was a crazy situation. But that's traditionally the way that you can provide a little bit more diversification and a little bit more balance or dilute the risk in portfolios.
Okay. So how does one get started investing, right? If you want to get putting your money away. And let's talk about this in the terms of an entrepreneur. How does an entrepreneur with a business that is starting to get steady cash flow out of it, even if they're not, what's the first step? Do I need to hire Winston right away?
Ideally, yes. Of course. That's the number one way. But, again, when we started, it's like, I think about myself as a coach, a financial coach, right? And I know truthfully, and again, because I like to use analogies and things of that nature, truthfully, some people want to do it themselves, especially some entrepreneurs. They're like, hey man, I can do this on my own.
I do everything else.
Right. Until they figure out they can't. So
they call you.
Yeah. I use the gym analogy or the workout analogy, right? In kind of most big box gyms, you can build your own workout plan. You can go work out on your own. You may get some results that you want. But there are also people that says, hey, I've done this for a period of time. I need to hire a trainer to help me get to my goals. Because that trainer is going to be more focused and more targeted around what's good and what's best for me.
Yeah.
Right. So y'all maybe do meal plans. He's going to give you a workout plan that's structured strictly for you. It's not going to be cookie cutter for you and 50 other people.
Right.
It's going to be ideally what's for you.
For Winston Trotters, for Ayo Idowu.
Exactly.
Yeah.
And so I'm the trainer. When people want, you can do it yourself. And there are solutions that help you do it yourself. There are the applications that you can download and use and start buying trades immediately. Fund them with a little bit of cash and you can go out there and place your trades, right? And in some cases, I won't argue against that. I would say, hey, if you want to dibble and dabble and even for my clients that I still work with on a personal basis, I say, hey, there's a portion of your money that you have in those type of solutions. Keep doing that. If you want to play and test the water, keep doing it, right? And that's a small percentage of the portfolio.
Right.
But the other percentage of the portfolio, let me and my team really help you lock in on the goals that you have and help you start targeting or getting towards those goals. But to get started, to answer your question, I know I'm kind of rambling a little bit.
Good. This is your show, man. Go ahead.
I would say back to what we talked about earlier, right? If you just want to get started in this investing world, take a look at where you're spending your money at right now. What have you bought or purchased, especially over the last holiday season? What do you have in your home? What companies or things have you used your dollars and spent on, right? If it's Nike, if it's Apple, if it's Target, if it's Walmart, if it's, American Airlines or Southwest Airlines or whatever the case may be, even like I'm spending a lot of money in some of these places. Maybe I should have ownership in some of these companies.
Yeah, agreed 100%. And it's funny. Somebody told me one time that, I was a kid and it was helping me get an entrepreneurial mindset. Everywhere you look, there's millionaires, right? Like this cup right here. So whoever made this cup is a millionaire. Whoever made this frame is a millionaire. Who's ever out here making grass walls is a millionaire. Microphones, XYZ, right?
Exactly.
I think it's the same thing when it comes to stocks and growing wealth. What's an example that, Nike, that's a whole company of shoes. Nike is making these, or like Kohl's or Target, all these places that we usually consume, you can buy stocks and invest into. You don't necessarily have to go in and buy the big real estate portfolio or anything like that.
True.
I remember what I was going to say. I love your analogy about the big box workout where you can go in and if you just want to get in shape, you can hire someone or do it yourself, right? Mm-hmm. And it talks about the level of complexity too. There's a point in everybody's career, entrepreneurs or regular corporate employees, where your situation is not complex enough to where, we can do it ourselves, right? Or I can hire somebody and not have to worry about it.
Right.
Either way, if I'm just trying to lose weight, sure. Mm-hmm. But if I'm trying to compete for the Olympics, right? Or if I'm trying to make it to the NFL, or if I'm trying to run a marathon, generally it's like, okay, I'm not going to do this myself. I'm going to hire a coach, or I'm going to seek professional help. Yeah. And that's the same complexity. Once your complexity gets to a certain level, right, it's probably wise to hire a coach or an agent or somebody who's going to guide you through this.
That is true. That is true. When I sit down with business owners or executives or even professional athletes, or just, you're the executive in your own home, mm-hmm. right? And I talk to them about, okay, what are your goals? What are you looking to accomplish? And we figure those things out. We kind of build a game plan or a strategy from a financial perspective and help them kind of get started. But I tell them this, I'm like, you're an expert in whatever you're doing.
Good at it, great at it, or else you wouldn't be at this level.
You wouldn't be at this level. I said, continue to be that. Now I'm a part of your team to take some of this stuff off of your plate because I know I'm pretty good at what I do.
Let me do me.
Let me do me. Let me be the expert in my realm, mm-hmm. and you continue to focus on being the expert in your realm, and I'm just a part of your team. I'm helping you get to that goal, that finish line.
Any recommendations for the do-it-yourselfers out there?
Again, look at what you consume on a regular basis, invest in that as a starting point. And in some cases, for people that may be a little bit more advanced, look at something like what's called an ETF or exchange traded fund, right? ETFs are a great way to kind of get initially started into investing, and you can own a bunch of different companies within that one investment.
That's a great, okay, let's take a step back. What's an ETF? What's a mutual fund? What's a stock?
Good question.
Because I want to know the difference between those three, because I feel like when you talk to people like, you be trading stocks and stuff? I'm like, yeah, but I'd rather I don't want no funds. I want stocks. And it's like, well, you're getting, so go ahead, explain that too.
Yeah, so a stock is just an individual company or position. So again, we've been talking about Nike and Apple. Yeah. I use Apple, for example. You can own one share of Apple stock. That means you are part owner of that company, mm-hmm. right?
So I can walk up in the offices and be like, look, y'all better start.
I don't know if
y'all better get to work.
I don't know if you can do that.
I own y'all.
I don't know if you can do that.
You see this stock? This is my company.
Yeah. I don't know if you can
Where
do
Tim
that.
Cook at? Hey, Tim, you ain't called me back.
Exactly. But again, that does make you part owner of the company when you own a share of that stock.
So you participate in the ups and the downs of that company.
You participate with the ups and downs. Now, and again, this is not a recommendation or component to purchase Nike or Apple stock. I'm just telling you historically what Apple has done over the past. They pay dividends if you own their stock. And typically if you've held their stock for a period of time, you've seen some appreciation and growth in your portfolio. But going back to your question. So that's a stock. A mutual fund is a collection of stocks and or bonds.
So when you buy mutual funds, you still have stocks?
Yes, yes. Mutual funds can be consumed of or consist of stocks and bonds and a combination of both. So you're pooling your resources with other investors, to invest in a portfolio of stocks and bonds and or stocks or bonds. It could be mutual funds can be built a number of different ways, but it's a combination of different positions in stocks. And then an ETF is similar to a mutual fund. The difference is with an ETF is basically computer generated or based on an algorithm. And there is no fund manager behind it.
Okay.
But a mutual fund will have a mutual fund manager that's actually picking the stocks and the bonds that are going to go inside of that mutual fund.
Okay, so there's still stocks in a mutual fund or an ETF.
Yes.
Okay, so it sounds like stocks are individual companies, right? And you literally have to, in order to follow the stock, you have to follow all the companies.
Yeah, ideally. Yep.
And a mutual fund is a really, really smart guy in New York sitting in an office managing the stocks for you, but all you do is buy one position.
That is correct.
And he or she decides how much or how little goes into it and makes the trades. And you can just sleep knowing that hopefully the investment objective, whether it was growth and income, capital preservation, that person is continuing to do that. All you would have to do is kind of just follow his or her trades.
There you go. You're hoping that you decided to invest with the right mutual fund manager.
And then ETFs is you get rid of the person sitting in the office. You're probably paying cheaper fees, correct?
Yep.
Paying a little cheaper fee, and you just have a computer that kind of generates the same thing a mutual fund does, and you just follow the returns that way.
That is correct.
Okay.
That is correct. And so, another kind of analogy or example for that is, especially the way ETFs were kind of initially constructed or started. We'll take the S&P, for example. The S&P 500 is an index, right? You can't invest directly into the S&P. It's an index, right?
Meaning what? What's an index?
Meaning, so the Dow Jones is an index. The NASDAQ is an index. There's an international index. There's a host of different indexes out there, right? The Russell 2000 is an index.
And the indexes follow what?
Different sectors, trends, markets,
So they too, kind of like ETFs and mutual funds, have a basket of stocks, but they're already decided what those indexes are.
Right.
Okay.
Right. But again, you can't invest directly into an index. So with an ETF can be created to mimic an index. Right. So there are S&P 500 ETFs that you can invest in that follow the S&P index very, very, very closely. So that's how, if you said, hey man, I don't want to go out there and individually buy all the 500 plus stock positions on the S&P 500. I can just buy this one ETF and do it that way. So it's a way for you to invest in indexes without having to go out and buy them individually and or in a mutual fund.
What are the benefits of having your portfolio professionally managed?
Professional management. You got a pro.
You got someone who does this.
Exactly.
Okay.
That day in and day out, and they're considered a professional for a reason. Yep. So again, it's one of those things to help people decide, hey, you know what? There's only so much time in the day, right? How much time am I going to focus on being a professional at this endeavor, that endeavor, or whatever the case may be? If I can leverage my time and use somebody else's time to be a part of my team and be a pro on my team, then I think it makes more sense to do that.
100%. Kind of like we talked about in a few other episodes is delegation. We talk about with our businesses, delegating our business, but even with our personal life, delegating some of those things so we can spend more time in our businesses or with our families, loved ones, or doing the things we like to do.
Yep.
Or maybe asleep, right?
Yeah.
Whatever it is.
Yeah.
So we talked about in COVID, there was an influx of black, talked about during COVID, there was an influx of black investors hopping into market. Have you seen that?
I have, and in some cases, uh, I think it was good because it sparked the energy and the idea of making or having your money make money for you, as far as getting people into investing. But in other cases, there were some false narratives and false realities that I think that were painted as well, because investing in most cases, it's not a get rich quick thing. And if
it's not, man, I quit. I don't want to. Thought I was going to get rich tomorrow.
No, it's not. And so there have been some instances where people have kind of, gotten lucky. They decided to, invest in a certain thing and it just skyrocketed.
Peloton over a 3-month period.
Exactly. But
or following Elon Musk's Twitter and buying Tesla puts right after, right?
Exactly. And so, but during the pandemic, I've seen things pop up from currency trading to trading options and all this other stuff.
GameStop.
The meme stocks with
Bitcoin,
GameStop, Bitcoin.
Doggy coin, Dogecoin.
Exactly. And again, I am not
Forex.
This is no discredit to any of those strategies or solutions that some people started to implement, but there are risks associated with them. And if you understand and know what the risks are and you still decide to make a decision to do those things, then that's cool. But there's nothing out there that's just a get rich quick type thing.
When you talk to anybody who's very well versed in the cryptocurrency space or those other spaces, the thought process is that financial advisors are just so against them because we work for the man and the man doesn't want these to be successful.
Right.
And I laugh at that because really our goal is to make you money.
That is true.
Our goal is to make you money. And these corporations that we have these broker dealers we've latched on to also want to make you money. But our goal is also to remain compliant and being able to keep your money safe.
Yeah.
And one of the thoughts I've always told people is like, it's not necessarily that a financial advisor doesn't know about Bitcoin or doesn't want to put in your portfolio because my company would rather sell you these products that we have, but it's more so along the lines of we can't look you in the eyes and tell you it'll be safe investing in these because A, there's not enough research behind them.
Right. B,
there's no proven strategy to have a high likelihood of outcome of success, and C, they're just we truly think they're funky, right? And again, at the end of the day, there's not many things we can invest in as financial advisors that can double in a day. It's just not the case.
Yeah.
There's not many things that could cut in half in a day. You know what I mean? And the fact that that's what's happening here is it makes it very risky. And our job is to manage risk. It's to make you money, but it's to keep your money too.
There you go.
Now, if as an advisor, my job wasn't to keep your money, it was just try to make money. If it was swinging for the fences and maybe striking out, maybe hitting a home run, that'd make our job so much easier.
Yeah.
I would never diversify.
Yeah.
I would never buy bonds, right? I would buy Peloton when, I have a crazy idea. You know what I'm saying?
Yeah. What you're saying is we actually have rules that we have to follow.
Boom. Thank you. Rules we have to follow, but we're trying to help you out.
Exactly.
If you want to buy that stuff, go ahead. But I'm telling you, like, I truly don't think that's a good idea.
But there are guard rules and rules for a reason. Imagine this. Imagine going into a bowling alley and there are 20 different lanes and it's just one big lane and everybody's throwing bowling balls down the lane. There is no separation. There is no guardrails. You just got bowling balls going everywhere. That's dangerous.
Yeah.
That's dangerous and super risky.
Yeah.
And where are you going with this, Winston?
I was about to ask, but I'm like, you're going to bring it home.
Similar to the cryptocurrency world. And again, I'm not against cryptos. I think cryptos, they are here. They're going to be around.
And once they get some more research and backing behind it, I think it's going to be a great tool to create wealth.
Great.
I truly do.
Yep.
And I think it is a great tool now, but it's not going to be in our platform until they can get some regulation behind it.
Until they can create more rules around, right? But where I'm going is with cryptos is, and then this is the conversation I have with my people. I don't try to talk people out of cryptocurrencies, investing in them. I just said, make it a small or a certain percentage of your portfolio that you're willing to be risky enough with.
Because of the risk mitigation.
Because of the risk that's associated with them. And ideally, my goal is to mitigate the risk, as you just said, right? Because again, right now with cryptos, there are little to no rules associated with them. In our world, we have a opening time and then closing time for the market, right?
And then these companies that are listed on the market also have rules they have to abide by on a quarterly basis.
Exactly.
They get audited by the SEC and these other governing bodies to where they can't lie to you and say something is doing better than it is.
Exactly.
And there's also proven track records of everything that's happening.
Right. With cryptocurrencies, there is no open and close.
No transparency.
So you can go to sleep.
And you can lose money.
And you can wake up 5, 6, 7, 8 hours later, and your cryptocurrency could have tanked in those 2 or 3 or 4 hours while you were sleeping.
But some hustlers will say that's what you get for sleeping. Your ass should have been up, right?
That is true. That is true.
You should have been up.
That is true. So again, this is no disparagement to cryptocurrencies.
Yeah.
I just say be as smart as you can about investing in them and make it a certain portion of your portfolio that you're willing to say, hey, if I put $100 in, if I lose all 100 of it, I'm okay because I got some other investments on the other side to balance out some of that risk.
Let's talk about, and this will probably be my last question. Let's talk about entrepreneurs, especially the ones that have left corporate America, don't have the pleasure of passive investing into a 401k. What are some of your favorite ways an entrepreneur can save for retirement or prepare for retirement without obviously having a company sponsor 401k?
Yeah. And so, outside of 401ks, there's what's called SEP IRA. And what SEP IRA stands for is Simplified Employee Pension.
The crazy thing is I didn't even know what SEP IRA stood for. Yes, I say it probably 5 times a day.
Yeah.
It's a SEP. What's a SEP?
Simplified Employee Pension, right? And so they can utilize strategies like that to offset their taxable income or the income that they're generating in their own personal business and to put away for retirement. There's also things like Roth IRAs that they can also put money into, depending on how much income they're generating. But there are solutions out there that entrepreneurs can tap into and utilize.
So you can still save, because obviously IRAs, you can only put like $6,500 sometime. Maybe this year, I think it's
$7,000 this year.
$7,000 this year.
Yep.
And IRAs, you can only put $7,000. 401ks, you can put like 22,
23 this year.
So a SEP IRA is kind of a mix between both, right? Since I don't have that job where I can put that much, I can do it this way. And it seems like a little more fluid, right? Because you could lump sum a SEP IRA if you want to.
Yeah, the max that you can put in a SEP IRA for a given year for this year is $69,000.
Okay.
Actually.
Or
25% of your income.
So whichever one is lower or higher?
Whichever one is
lower.
Lower.
Yep. Okay.
Yep.
All right.
Yeah. Yep.
So, and you like those because, well, here's the thing is, those are nice to have and you can put more money actually than you can in a 401k, but you have to be diligent about it if you're going to do it weekly or at the end of the year. Like it's actually writing a check. I've had jobs where I've had 401ks before. I've never actually put money into my 401k. It's taken. I feel like that's the difference a lot of business owners have to realize. You have to put things.
Yes.
And you're making a conscious decision every check, every week, every month, every year to put things. Yeah. And when you make the wrong decision, sometimes it can hinder you in the future.
Well, again, as an entrepreneur, this is one of the benefits of having a team, right? And I'm going to stop generating and giving my own commercial because it's just not about me either, right? As an entrepreneur, again, I believe that you are an entrepreneur because you have a strong affiliation and a skill set to the business that you're operating and running, and you know how to do that well. Right. But you also know the value of having teams or a teammate or a good team that will assist you as well. So outside of having an investment advisor or somebody like myself, you also want to have a good tax guy, right? And ideally, as it relates to SEP IRAs, Roth IRAs, things of that nature, ideally, both myself and your tax professional is giving you similar advice on, hey, this is how this is going to help your business, help you. Because at some point, that entrepreneur wants to be able to say, hey, man, I built this successful business. I've made a nice amount of money and income for myself and my family. At some point, I want to do something different. I want to live a different lifestyle. I don't want to have to work or work in my business every day. And so, that team can say, hey, man, what do we need to be doing and positioning for to help you transition your business to either somebody else that you can sell it to, a family member, or if you just say, hey, I want to just say, hey, I made enough money from my business and now I want to fish, golf, or travel.
And the great thing about corporate America is that when you leave, when they fire you, if you get laid off, company goes under, you still have your retirement assets that were automatically saved for you.
Right.
The worst thing about being an entrepreneur is you can hustle your whole life and create a great income creating vehicle, but unless you purposely put money away,
yes.
And if let's say your business isn't sellable or transitionable, right? You really have nothing once the cash cow is gone. Mm-hmm. So that's why, it's extremely important for people to be actively investing and making their own 401k equivalents and putting money away and making sure it's invested. I don't know, to me, again, it's, if I wasn't in this business, let me take it back, because I do have partners that manage my money and I manage their money. But if I wasn't in this business, I would have an advisor, especially listening to all the stuff you're talking about.
Oh yeah.
That's just stuff I don't want to do. Yeah. Like I'm running a conglomerate. I'm running a space shop, a mothership. Yeah. And I don't want to sit here at the end of the day, making sure that, I have the right amount of sector exposure, or the asset classes are off 2%. I got to make some trades, or now I got to, make some taxable deductions based off this, or put money here. But I don't want to deal with that.
Exactly.
I want to pay somebody, in a nice suit to do it for me.
Before I got into this business, right, I had a financial advisor.
Boom. And you had to fire him, huh?
Well, yeah, we did have to fire him. I did. But I mean, looking back on it, it was one of the best decisions I could have made. I'm like, man, I didn't really know I needed this until I actually got it and needed it. And I was like, man, this is.
I think that's most people. Most people don't think they're ready for one.
Yeah,
you know what I mean?
Yeah.
And then, once you get someone telling you what to do, like, again, I have advisors, CPAs, not a financial advisor, but like I just have people, a social media expert, right? I have people, it's like, could I figure this out? Maybe. But you know what I love? Not having to figure this out and just telling you, am I doing the right thing? Cool, go about it, rather than going and studying whether I'm doing the right thing, because my time is spent better somebody else, somewhere else.
There you go. I like to think the most successful business owners or business people have utilized the leverage that they have in using other resources and value resources to help them be successful.
Yeah.
Right. You talked about Tim Cook, and you talked about, I think about like Mark Cuban, who owns the Mavericks, right?
Right.
Mark Cuban.
But does he still own the Mavericks? Didn't he just sell them?
I think he still has a large ownership position in the team. I think he's, but
yeah, he asked me if I want to buy it. I was like, nah, I'm gonna wait.
Yeah.
Wait till the Bulls are for sale.
And then right after he asked you, he asked me too.
Okay,
but I told him, I need.
Mark be tripping. He be trying to sell stuff ain't nobody want. But anyway,
I said when I get 1 or 2 more clients, Mark, I'm coming.
Yeah,
1 or 2 more clients.
We call him Marky. Yeah, back at the career, I've been knowing him, Marky. Yeah.
But he wouldn't be as successful as he is if he was just on his own.
Sure wouldn't.
Right. He has other successful people that work with him as a part of his team. Mm-hmm. To make him look good.
That's right.
Right. And so that's my role and our role. When you're a successful person, you want other successful people working with you to make you look better.
Just like my tailor making me look good.
I agree. I need to meet your tailor too, by the way.
I got you, man. I'm going to take care of you. Winston, I appreciate you coming in today. I think just talking about investing and how to create a portfolio from a basic level, the intricacies of these, I feel like, you taught me a lot, but you also taught me that I need to hire somebody like you to do this. How do people get in touch with you?
I'm on social media, just about, Instagram, Facebook, Twitter. My handle is win_chill, WIN_CHILL.
You ain't got no TikTok?
No TikTok.
Not yet?
Not yet.
Not yet. You ain't gonna be on there.
My daughter, she's on TikTok, man, and I hadn't. Maybe somebody can convince me I need to be on TikTok, but so far it hadn't happened yet.
All right, cool.
If there's some people watching, look, hit me up. Say, hey, Winston, I can help you. I need it, but yeah.
LinkedIn?
Yes, LinkedIn. Yep.
LinkedIn, Winston Trotter?
Winston Trotter on LinkedIn.
Awesome. Thank you guys for watching this episode of Common Sense. Again, I'm your host, Ayo Idowu. If you'd like to get more content from us, please like, subscribe, and follow our page.